The IRS draws a very sharp line between a hobby and a business. You need to understand that distinction because, frankly, getting it wrong can be a costly mistake. So, is your side gig a hobby or a real business? It seems like a simple question, right? But the answer has a massive impact on your finances. Whether you're selling crafts, freelancing, or earning any other side income, how the IRS answers this question determines exactly how you're taxed. And this is the absolute core of the issue. The classification the IRS gives your activity directly impacts your tax bill. Why? Because it governs whether or not your expenses and losses are deductible against your other income. To figure this out, it doesn't matter what you call it. The IRS uses a very specific 9-factor test to look past the label and determine if you genuinely have a profit motive. Okay, let's break this test down. The first 3 factors really focus on your professionalism and your dependency. The IRS wants to know, are you treating this seriously with meticulous records? And also, do you actually rely on the income you're making? Next, they're going to look at context and your level of expertise. Are your losses understandable, like typical startup costs, for example? They also want to see if you're actively trying to improve your methods. And hey, do you or your advisors actually know what you're doing? And finally, they'll review your track record. Have you turned a profit before, either in this venture or something similar? Does the activity actually make money in some years, even if there are losses in others? And are you maybe counting on your assets, like equipment or property, to go up in value and create a profit down the road? Now, it's absolutely essential to understand this is not a simple checklist. There's no single factor that decides the outcome. The IRS weighs all 9 of these things together to get the full picture of your intent. You might be strong in some areas and a little weak in others. That's okay. So this brings us right to the bottom line. Why does this classification matter so much to your wallet? And here's the night and day difference. In both cases, you have to report all your income. No way around that. But, and this is the huge part, as a business, you can use your losses to lower your taxable income from other sources, like your day job. As a hobby, those losses give you 0 tax benefit, nothing. The IRS is completely unambiguous on this. The rule is stated right there on their website, and it makes it crystal clear that without a profit motive, you just can't deduct those losses. It's a hard and fast rule. So, given the stakes are so high, how do you provide the absolute best evidence that you're running a business and not just a hobby? Of all those 9 factors, operating in a business-like manner is the one you have the most direct control over. And really, it all starts and ends with your documentation. Taking these 4 steps provides powerful, tangible proof of your intent. Meticulous records, separate finances, active marketing, and professional conduct. These are not the signs of a casual hobby. They are the clear hallmarks of a business. Ultimately, you just need to remember this. If the IRS ever questions your profit motive, your books and records are your single most important piece of evidence. They prove your intent far more effectively than words ever could. Which really just leaves us with one final practical question you should ask yourself. If you had to prove your profit motive tomorrow, does your paperwork actually make a compelling case?